Welcome back to Mortgage Momentum. We are excited today to talk about kind of a playbook of sorts for homeowners and some money moves that most homeowners don't make. So stay tuned and we will jump into the discussion and show you some things that you should be looking at as a homeowner. Welcome to Mortgage Momentum. Smart guidance, real stories, better home decisions. We are your hosts. I'm Jarod Temple.
And I'm Danielle Hugunin. Thanks for joining us today. This is your go-to space for strategy, stories, and staying sharp in an ever-shifting market.
Let's jump in and get the momentum rolling. Welcome back to Mortgage Momentum. I am Jarod Temple.
I'm Danielle Hugunin.
And we are your hosts of Mortgage Momentum. Let's jump into it. This week, we wanted to start a discussion about some of the biggest mistakes homeowners make, or some of the biggest things that they overlook, and they should. So I think most people think about buying a home and they close on their home and they're like, "Ooh, we made it. We're finished. We did it. This is where we wanted to be. Everything's good." I think that I look at it a little bit differently. I think it's really more of the starting line. When you look at it strategically and you look at it as an investment rather than just a home, it can be both.
Right.
So
it should be both.
It should be both, yeah. So I think that most people don't realize that their home, or they don't think about their home as their largest asset, but it is. And
for most
people, yeah. For me, it is. And I think that most people don't treat it as an asset, though. And I think that most people don't spend the time they need to, or give the attention they need to managing it as if it's an investment. So let's get into some of the things that many people miss.
Okay, let's do it.
All right.
What do you think, like, percentage of the population actually own a home, like, at this point in time?
Oh, I used to know this answer.
It's
60?
More?
60 or 70%, maybe?
Okay. So a lot of people.
More the people than not.
Yeah.
Definitely own a home.
Okay.
That's a good question. I'm going to have to look that up.
Any live callers?
Any live callers? Ring, ring, ring. I think it's probably 70%. Purely guess. I hope I'm not way off. But
okay.
People are ChatGPTing right now.
Right.
To check us, fact checking us. So I think the first thing that comes to mind for me is insurance. It's been such a huge change really in the last 5 years.
Yeah.
And it's affecting affordability.
Huge.
And a lot of changes as far as coverage for repairs, roofs, deductibles, all of those things. And I think that more now than ever, people should be more strategic about who they have insuring their home. And there's almost it used to be, this is what I need.
Right.
I need to have homeowners insurance, or my mortgage company is going to put insurance on it for me. But I think now there's an opportunity to be strategic about it.
Yeah, I have a lot to say about this topic because it's a daily conversation.
Buckle up.
So those of you that put your homeowner's insurance in your mortgage payment every month, like most of us, how many of you have an insurance agent that's calling you and doing an annual review with you before your policy renews? Probably not a lot. Those are generally the anomaly. Mm-hmm. So if they're not calling you, you need to be calling them, because when your policy auto renews every year, the bill comes to us at the bank, not to you. You might get something in the mail that you read or you don't read. And so most of my clients don't realize that their premiums have changed until we increase their mortgage payment, and then they have no idea what's going on. So think about, all of the natural disasters that have impacted our country. Every insurance carrier is different depending on how much impact they've had. It's great to have the loyal relationships. I mean, I think that matters 100%. If you have an insurance company that is, online, no personal touch, if you have a claim, if you're in a wreck, you have a hailstorm, if we're in the Midwest, I mean, it is very difficult to process a claim, to get the money that you need, to do the repairs that you need. And so I think working with someone that you trust and someone that communicates with you and a company that is reputable and pays out on claims is so important. It's like insurance is like not that big of a deal until you need it. And then it's a huge deal.
Yep.
The other thing is insurance agents need to educate our clients more, because I today looked at a refinance for a client. Their insurance premium had doubled over the last year, and there had been no claims. The only reason that it changed is because they removed their autos from their home policy and moved them to a different carrier. And not having the discount of having multiple things on one policy literally doubled.
50% discount.
Yeah.
100%.
It honestly is usually like 30 to 40%.
Yeah.
I mean, but that's a big number.
Yep.
And so it's not just about home insurance. You got to look at the big picture. But if your insurance is $4,000 a year and it doubles, that is a massive amount of money for your payment to be changing.
Yeah.
And you have to know about that. You have to be ahead of that. Most insurance companies, if they're not reviewing for you, there are savings that they can have. Even if your premium is going up, you've got to ask the questions. You've got to pay attention and not be blindsided.
Yeah.
You know, and you can move insurance companies if you have to, but that's not always even what it takes.
Yeah. Well, and I mean, let's be honest. It's not sexy to talk about this. When you're buying a home, you're like, oh, I need to get mortgage insurance. You don't want to really talk about what actually happens when your house burns down.
Right.
We're talking about a celebratory thing. We just closed on our house.
Right.
We're not talking about rebuilding a house that just burned down.
Right.
And nothing can be worse than when something catastrophic happens and it puts you in a really bad spot.
Yeah.
To where you may not be able to recover for quite some time.
You don't want the cheapest insurance in that situation.
You get what you pay for.
Yeah.
And so many people don't take that into consideration.
Right.
And I'm not even asking you to take it into consideration right away, but do it soon.
Yeah.
And make sure that your policy is set up so that, you know, if you can't afford an expensive deductible, either have that money set aside in case you need it, or work with your insurance company and make it a lesser deductible. But just make sure you're covered so that when the unthinkable happens, you're ready.
Yeah. And pay attention. Know when your insurance renews and have the conversations before it does.
And it sneaks up on you.
Yes, it does. I
don't
am
read-
guilty of
Me
this
too.
just happening to me,
Yeah.
actually. So,
Yeah, I mean, the binders are not fun to read. You think that our literature is terrible. I mean, insurance is even worse, I think. But there's a lot of stuff in the fine print. So to your point, having someone that's reputable and trustworthy and is going to explain things to you is important.
Yeah.
Because, you know, bad things happen to good people, and don't make a bad situation worse by not knowing where you're at. So,
Right.
Perfect. That's number one. Number two, PMI removal.
what is PMI?
Private mortgage insurance.
And when do we have this?
Well, if you don't have 20% down payment, then there's a third party that insures the lender in case of default. Also not fun to think about, because no one wants to think about something happening and they can't make their mortgage payment.
Yeah.
But PMI essentially allows people to buy a home before they have 20% down.
And also, it is not as expensive as it used to. I mean, this is another huge myth, like having to have 20. PMI is so expensive. I just want to avoid it at all costs. I mean, sometimes it's $30 a month.
Yeah.
This is not earth shattering.
Yeah. Well, and on conventional loans, it's not forever. You know?
Correct.
When you build up enough equity, you can drop it. And it drops off automatically at 78%, but you can request it to be dropped off at 80%.
Well, and also in a market where, you know, properties are appreciating, you know, you can still request that. I mean, yes. And also, if you have a good lender, they're helping you monitor these things. But
100%.
you are correct. Removing that is huge.
And it can be a big difference for people. So, property taxes. This is a huge one too that affects affordability in a huge way right now.
Yeah.
Taxes are constantly going up, and especially recently they've been going up by a lot. So when is a good time? Yeah, here in the Metro, KC Metro. After you see rapid appreciation, as a rule of thumb, how often should you look at what your taxes are? When should you contest it?
Well, generally, a county is going to assess the tax value of your house at the beginning of the year. So usually sometime in January, you might get the notice at the beginning of February. They're going to tell you, here's how much we are valuing your house at for the year 2027, next year, for tax purposes. Your taxes aren't going to change right away because that's not how it works, but you know exactly what value at that point they're going to be basing that off of. That is the moment where if you feel like you're being overvalued for tax purposes, you need to start looking into contesting that information, because you've got time to do it still before you get that tax bill later in the year.
Everybody thinks their house is worth so much when they go to sell it, but they sure don't think that when they get taxed on it.
True that.
Situational.
Yeah, agree. And I mean, honestly, depending on where you live, not every city and or county make it very easy to contest taxes.
Yeah.
And I think a lot of people, and I would admit that myself included, don't do it because of the difficulty that it, just how hard it is to do, or not knowing how to do it.
Yeah. Well, it's not, they don't make it easy.
No.
And they do that for a reason. They don't want every resident of that county to contest their tax bill.
Right.
They don't have the manpower to do that. So,
right.
Anyway, so yeah, but I think it's something you should at least look at annually and keep an eye on it. Because it sneaks up on you.
It does.
So.
And if it goes up and you're concerned about how much that might affect your taxes, that is a great time to call your lender and say, I just got my notification for my value for this year. Can you please help me understand how this might impact the future of my payments, so that you can be prepared for that?
Mm-hmm. I wonder how many people call and say, my house is worth way more than this.
None.
Yeah. Why would you? They're going to get their taxes anyways. Yeah. All right. Number 4, use your home equity strategically. There's a lot of things, that people can use their equity for. Well, anything. They can use anything they want. They can cash it out and head to Harrah's if they wanted to. But I think that if you start to look at your home as an asset, there are some strategic things you can look at. Renovations is one of them. Mm-hmm. I think we run into it often on appraisals and when people are selling their house about deferred maintenance and, things that maybe are, nobody wants to cut a check for something that needs to be done on their home, right? But
it's like putting tires on your car.
Yeah, that's not fun.
No.
There was nothing wrong with my old tires, except they're a little bit bald and dangerous in the winter.
Right.
But necessary, and just like you change your oil, that doesn't excite me, but it's necessary.
Yeah.
Your home also ages, and there's certain things that when you go to sell, if you keep up on things, will make it more marketable, and you'll enjoy it as you go. So.
Well, yeah, and also to the point of like building wealth and equity and appreciation and all of that, not that you want to use your house like a revolving line of credit, but it is an asset that you can borrow against in the future. And as you accumulate equity, then that is, the opportunity for you to be able to do that. Maybe you borrow money to finish a basement or add a bedroom and therefore increase the value of your house. Maybe you have enough equity to pay for your kids' college education so that you don't have to take out any loans, therefore saving you all of that interest. There are so many ways to utilize your home as an asset and as an investment strategy outside of just what most people think about.
Mm-hmm. Yeah, absolutely. Another thing is debt consolidation.
Yeah.
If you do find yourself in a spot where you have a lot of revolving credit card debt, it's not uncommon to have 20 or 25%. I mean, that is insane.
Yeah.
And I don't think you should do this every couple years and then just run the credit back up. But if it gets you... Yeah, it is hard, but it can get you out of a hole.
Yeah.
And hopefully people can get out of the hole and stay out of the hole.
Yeah.
But it can save a ton of money on interest from those types of things too. Another thing people can pull their equity out for is for investment opportunities. If there's a business that they want to be a part of, or there's all sorts of things people can pull their money out for that too. And then another one, just emergencies. If something happens, life happens, and if you have equity in your house, then it kind of creates a little bit of a safety net for people if something comes up. Next one I want to talk about is keep a home maintenance reserve for when things do come up. Nothing is worse than an emergency coming up. You put a ton of money on your credit card.
Yeah.
And you can't ever, we just talked about it, dig yourself out of that.
Yeah.
I think having a safety net, use your equity as a safety net for the unplanned events that could happen.
Well, and also a lot of energy and gas companies now, let's talk about like the home warranty concept, right? And so check your gas and your energy companies, because a lot of them offer, for very minimal cost, like a warranty type of a deal, if you will. If your HVAC breaks or, any of your major things, a lot of times they will cover that if you participate in that. And that doesn't cost that much. Not everyone has that option, but, check, because a lot of them do.
Yeah, 100%. All right, next one. Know your home value. I'm probably a little bit on the obsessive side. I like to know what my home is worth, and I surely want to know what houses in my neighborhood are going for.
Well, now we have the Zillow, thankfully. So
yeah, which is like Credit Karma. It's like, oh, is that real?
Right, for sure.
So take that with a grain of salt. But I think there are certainly some tools out there, and we help people see, hey, what do you think? We can get you close as to what we think the house is worth. And it's really not about what you've done per se, but it's about what houses around you are selling for. And I think it's important to know, though, so when things happen, you know what your options are.
Right.
And it's crazy. A lot of people are wildly off on what their house is worth until they get ready to sell it and they start talking to a realtor. And I just think it's an important thing to
it's good to know.
Yeah. Create a home improvement roadmap. I think we talked a little bit about deferred maintenance and things like that. Look, your HVAC is not going to last forever, and it always happens when it's 98 degrees and your air conditioning goes out, and now you're like, oh my gosh, I gotta find a place for my dogs. They can't live in this heat, and I can't sleep at night and everything else, and I haven't saved up any money. So I think it's prudent to know how old certain things in your house are, especially the big expensives, your roof, your HVAC, those types of things, appliances, and kind of start to plan for when those things need to be replaced so that it's not such a financial burden.
Well, and also if you're going to do projects like finish basements, remodel kitchens, bathrooms, don't assume that dollar for dollar that brings value to your house. While a new roof and a new HVAC are necessary and lovely, those do not generally bring an excessive amount of extra value to your home.
Yeah.
Renovating a kitchen, on the other hand, or a bathroom, or adding a bedroom, adding square footage that's usable, finishing a basement. I mean, those are all things that will genuinely and immediately bring added value and equity to your property. But as I like to remind my good friends who are very specific about their taste when they build, just because you love it and you want to spend an exorbitant amount of money on something, that's your personal preference. So identifying the things that are preference versus value makers.
Well, yeah, there's a lot of things. You build a retaining wall in your backyard that makes your backyard more functional. Great.
Yeah.
You spent $9,000 to do it. You're not going to get $9,000 out of that retaining wall when you sell it. If you just replaced carpet in a bedroom, you're not going to get the full cost of that carpet. That's just not the way it works.
Right.
Especially when you get an appraisal done.
Yeah.
So
yeah.
I think it's incredibly important to consider which things are a like and which things are a need.
Yeah, definitely.
And which ones bring value and which ones don't.
Yeah,
it happens a lot. We're like, oh, well, I just put tile in my bathroom. Well, that's great.
I mean, making it look current, new, beautiful, aesthetically pleasing is definitely going to help you sell your house.
Makes it more saleable.
At a higher premium, but yes.
Not dollar for dollar likely you're going to get out of it. but you get to enjoy it
Yeah.
while you have it too.
Except for most of us only do these things when we're ready to sell our houses. And why do we do that? Because it becomes more valuable to your buyer.
Yeah, well, or it allows it to move faster.
Yeah.
For sure. I think this is important. Updating beneficiaries in estate documents. Again, not fun to think about.
No.
What happens to my house when I die?
Yeah.
That's not fun to think about, but it really sucks when it happens and it's not. People aren't prepared. And probate is a real thing. And I look at it as I'm in a position where I'm mourning the loss of my mother. The last thing I want to worry about is added stress of things because they're not prepared. That sucks. And it's kind of selfish. So
It is very important.
it is. Be prepared because the people you leave behind
Yeah.
are going to have to deal with it if you don't.
Yeah.
So tracking equity and equity growth. This kind of gets back to know what your house is
Yeah.
worth.
Similar.
But also how fast you're paying it down. And I think having a plan to pay down your equity quicker is
Your principal.
yeah, your principal. Yeah, not your equity. Your principal down. Like we've got, you can do biweekly payments and make additional principal reduction payments, and all of that stuff saves interest and accelerates how much equity you have.
Right.
And it's always good to know where you're at and where you're going.
Definitely.
Are we on number 10 already?
We are.
And this one, I think, is super important. And having an annual mortgage checkup.
Just like we talked about with insurance.
Yeah, I mean, for sure. I think you can review goals with a good loan officer wants to be. I always look at it as I don't look at things as a transaction. I'm looking at it as a relationship.
Right.
And yes, I want to close you on your loan now, but I also want to do your refinance when it makes sense. I want to be the lender on your next home when it makes sense. And part of that deal is making sure that you're in the right situation now as you were when we bought the place.
Yeah.
Or when you financed the place. So having it's not fun. I mean, I love it because we're mortgage geeks,
right.
But most people don't want to watch what the bond market's doing and what our mortgage rate's doing. And it's easy, and it moves so wildly and so quickly now that it's not their job to do that. It is Danielle Hugunin's job to do that. And I know that you definitely keep an eye on those types of things and really identify opportunities before a lot of people even realize it's happened. At a minimum, though, I think yearly it's worth having those conversations. Are you getting married? Are you planning on having a child? Do you need to do a nursery? All those types of things. We've got renovation loans. You can tap into equity. There are a lot of things you can do to make your space work for you.
I mean, I agree. This should be one of those things like, we all go to the doctor. Well, most of us go to the doctor once a year, to the dentist. You physically are at least once a year making sure everything checks out. You should be doing that with your financial advisor, your insurance agent, your mortgage lender, because your financial wellness is also very important. And so you're right. I mean, and I think a great time to do that is when your mortgage company sends you that escrow analysis, and that's usually in like February or March when the new tax values have come out, letting you know like, hey, this is going to go up, your payment's going to go up because of that. I get tons of calls from clients when they get those letters, and I encourage everyone to call me because it's confusing, and oftentimes there are other solutions, and it's just a matter of having the conversation. So everyone should proactively be doing that.
Yeah,
I agree.
Well, and I think it uncovers opportunities, someone that's got mortgage insurance, like, oh, well, your house just appreciated and you've done this much principal reduction. I think we can eliminate the mortgage insurance, move you from a 30-year to a 20-year and keep the payment about the same. And now you've accelerated how much equity you build.
Right.
And in 5 your next house, you're that much further along and that much more prepared. So I think that it's easy for a homeowner to overlook some of the factors that that
Yep.
help contribute to those things. So,
Agree.
okay. Now I've got no, I don't. I have 3 questions that every homeowner should ask. Question 1. If I bought my house today, would I buy the same house again?
Probably not.
Well, I know you wouldn't. You move every day if you could.
A lot of people do.
I know.
I'm not alone.
I hope to die in the house I'm
Not
in.
every day, every 3 to 4 years.
Yeah. Well, that's excessive. to me, that's anxiety provoking.
But yes, I mean, it has to, when you buy a house, you have to think about these things. You know, am I going to have more kids? Is this going to meet my needs in 3 or 4 years? I encourage my clients to ask these questions to themselves because moving is not free. It costs money.
Yeah. And I think that situations change.
Yeah.
And your needs change.
Yeah.
And I think that's situational for each person. So I think it's something that's worth thinking about.
Completely.
And, the next question is my mortgage still supporting my goals? I don't think, we've talked about this 100 times about, the rate. It's not just the rate. There's so many things that go into it. And as your financial goals change, your mortgage, I think, can be an integral part of that strategy to maximize, where you're wanting to go.
Right.
So it's not just rate. It's about term. It's about what I should be doing with equity. Where are the missed opportunities that I could be leveraging your mortgage for? So,
Sure.
And then the last one, we've touched on this before too.
Yeah.
Am I using my home as an asset or am I just living in it?
For sure.
And I think you should be doing both.
I agree.
So, okay. Last piece I kind of want to touch on. What's the next 5 years look like, or what could they look like as far as building equity and wealth creation?
So I actually ask almost all of my clients this question when they come to me and they want to, get pre-approved or talk about a house. Second to, obviously, have you thought about your monthly budget? Where do you need your payment to be comfortable financially? But also, what does the next 3 to 5 years look like for you? That has to matter when you're buying and when you're thinking about selling or thinking about buying, because there are so many factors to consider. You have to think about that.
Yep.
Because you cannot make a short-term or a big decision based on a short-term need without thinking about all of those things, good and bad.
Yeah.
And we've touched on a lot of that, but
Yeah.
I definitely think that's a question that everyone should be thinking about.
Yeah, I do too. Well, and not to be keeping up with the Joneses, but I think move-up opportunities.
Yeah.
There's pros and cons, and again, it's kind of situational. But I think that it's something that people should be considering.
Yeah.
Sometimes it does make sense to move into a smaller house. Sometimes it doesn't.
Yeah.
But putting the numbers in front of people
Yeah.
versus just wondering
Right.
is a better plan.
And think about it. My dad used to always, on my birthday every year, what's your 1-year goals and what are your 5-year goals? I mean, we should all be thinking about these things as they relate to every aspect of life, including our homes.
Yeah, 100%. Yeah. There's anything else you want to add to that? I have more points. I just don't love them. If I'm being honest.
It's okay. It's okay.
I think that we talk about it a lot too, building wealth and using it and leveraging it as an asset. And we've kind of talked about a lot of the things in this podcast already that I think are really relevant.
Right.
So, yeah.
I think this is a great shorter podcast, but just a really good reminder to all of our listeners about, just what are the things we really should be thinking about. And even if you take one of these things away, even if you, hey, I need to check in with my lender or check in with my insurance agent or, think strategically about my future renovation project, any of those things, all of them, don't be overwhelmed by having to make sure you're doing everything right or perfect, because none of us are.
Yeah.
But start being a little more intentional, if you aren't already, about the decisions that you are making and also the ones that you're not.
Yeah.
I myself also need to do this.
We all do.
Yeah.
And I think that nailed it on the head. I
Yeah.
think viewing it as a home, yes, but as an asset as well.
Both.
And
It has to
leveraging
be
it.
both.
Yeah, and leveraging it to make it the biggest advantage for you and your family.
Yeah.
So, great. Awesome. Well, hopefully this gives you guys some insight and some things to think about and spurs you to make a phone call to someone or a bunch of people. And, yeah, I think that's great. So we appreciate you joining us on this week's episode of Mortgage Momentum. If you got value out of this, if you had a takeaway, please like and share. And if you know someone that needs this conversation in their life, please share it with them as well.
And
So
Jarod, how do they get in touch with you or I if they need to?
you can always reach out to either us, both of us, at Mortgage Momentum at bell.bank.
Not .com, .bank.
.bank, not .com. So, yeah.
Great.
All right. Well, thank you guys again, and we will catch you next time on Mortgage Momentum.
Thanks for joining us on Mortgage Momentum. If you got value from today's episode, subscribe, share it with a friend, leave a review, or email us feedback at mortgagemomentum@bell.bank.
We always welcome comments, feedback, and suggestions for future shows. Thanks for joining us, and keep your momentum going. Until next time.